Hello, this is Trading Coach Dan. I hope you guys are well. And link to my website on my profile here in TradingView. So, what we're going to do today is we're going to do my actual coaching um, system and curriculum live on TradingView, not advertising it, actually doing it. So I'm going to go through it with you guys, and hopefully we can complete it in 10 minutes. And you've got a full condensed curriculum on how to be a successful trader. So first one, M. First M out of the 5 M's I've got is motivation. It's understanding actually the goal should be financial freedom, not to make millions. So initially, have a look at what your freedom number is, which is how much you need to cover your costs plus 20% on top, just to have some comfortable margin there. A lot of people might be 3,000 a month or 4,000, somewhere around there, 3.5 for a lot of people. That type of areas always seems to be good. The clients I've got, and then it's just on about understanding that's your goal. You don't want to be glued to the screen all the time, so it might be 3,500 to cover bills and a bit on top, and then the ability to go on holiday, see family, and visit places and just helping community in other areas however you want. That's going to be your first M. Second is maths. M here. So the mathematics. That is looking at if you search online for things like risk of ruin calculators, expected value calculations, and items like that, you can get an idea as to uh, basically how quickly you can grow to where you want to be, how many trades it might take. You can even do Monte Carlo simulations to work out if you say earn an average of 2% expected value. And this is not your risk or reward, but on average, overall longer term, under expected value calculations under game theory and mathematics, you can have a look to see exactly what your expected gain is per trade, long run, and then how many trades it should take on average to get to the goal that you want, and then progressing from there. And also, some of it might be more passive portfolio. So, for example, if you can buy a passive dividend portfolio, maybe dividend growth portfolio, you can guarantee at least, say, maybe we'll call it 5%. Will be conservative. 5% growth each year. No, each month, maybe. Either way, you get the idea. You're looking at ways to get your 3.5 to 4,000 a month, and you may need a certain amount of money there to do that. You may need a certain amount of money to do that to then just swing trade every month to generate your cash. You definitely need at least, I'd actually say 12 months, 12 months of money spare that doesn't eat into your trading account for bad times, because it just helps your mindset so much knowing that you've got 12 months worth of security behind you. So if you're getting a bad month, it's okay. There's 11 months left to go of your money spare. So that's some of the stuff there. This is a game of probability and sequences, not luck. And understanding too, a little fun thing when you look at the maths is if you start with just 200 in your account and you make an average of 4% net gain per trade, over 500 trades, you have approximately 1 million. That's how you can turn 200 into 1 million. So it is a formula and it does work, things like that. Finally, I've done another video on my trading strategy with a simplified one, but I'm just going to go through it one more time on here as well. Let's get the drawing tool out. So we're on the third M now, which is momentum. And we're in 3 minutes 39 seconds. So if I find the drawing tool again, this is bullish structure going up. This is bearish structure going down. This is consolidation with a few failed auctions and etc. If forget the ray tool out now, when wrong one. If I get the ray tool, if when price is going up, you draw a trend line touching the bottoms, approximately the bottoms. If when price is going down, do a trend line touching approximately the tops, and then consolidation. You can actually see it here on the Bitcoin example, a bit of consolidation, but move the line up. Consolidation, you do horizontal lines top and bottom. You can identify bullish structures, bearish structures, and consolidation. If you do this with current price action, you can then determine really what's going on and whether or not a trade is valid. So the idea is here, identify at any moment, identify bullish structures, identify bearish structures, identify flat consolidation structures, and then once two of these are invalidated, that's when you know you have your trade. Should we take Bitcoin as an example, maybe? So There's not a bad example around here because we can see it eventually went down. So say we're at this point, we might have something like that initially. So we'll say this area because we know it went down long run here. So or maybe even no, we'll do it up here. We'll do it a bit tighter. We'll look at the internal structure here. So we're in this area here. At this point, we had our bullish structure going up. We had a bearish structure going down for now. No, we'll make it simpler. So that was a bullish structure going up. That pretty much was invalidated pretty quickly. If you want to look at it, we can say that. So that was invalidated at that point. We then have a bearish structure at that time, which is this here. Right, that's a good bearish structure. So that was the bearish structure because it made a high at a low, then it made a lower high. So that was the case, and we had a consolidation. As soon as price kind of left here, retouched the area, and then went down again around about this area, we know that the actual bullish structure was invalidated. Could have even done it like that if you wanted to, but the bullish structure around this point in particular, even that, we'll do it that. We'll zoom in a little bit. Let's get it clearer. So at this point, we definitely have proof it was invalidated. At that point there, the bullish structure. We have proof at this area here, we're no longer in consolidation. It left that consolidation area. We see the equal lows there. And then the bearish structure continued. You can see here. So you could be patient and wait for a retest, which is around about here. With a retest there, we might have moved the consolidation line there and treated it as that instead, which actually is accurate structure looking in close detail. So we had the break, we waited patiently for the major retest, and then some very minor consolidation here before we had a continuation downwards from that trend line. We start everything here because whilst we could do, we've already got the trend line here showing it, and we also have a lower low compared to the previous. So it's clear it is going into a downtrend. So we could have entered at any time in this area here, and we could have traded that all the way to here once line was breached, maybe there, going from about a 75, maybe 75, 76 area, 76,000 area, all the way down to the 7,500 area here, maybe 71. We might have even got out at 71, down from 76 to 71. That would have been the trade. So that just shows how understanding structures, these, if we can find it again, here they are. Just need to zoom out a little bit more. Understanding how when we identify bullish structures, bearish structures, and consolidation, and there's a breach of two of them, that confirms our trade, and we just follow the line from there. Really simple strategy, momentum. We're on 8 minutes 26. Next is the money makers, so checkpoints. Checkpoints primarily can be volume profiles showing key levels uh, of where we expect price to go. This example here, volume profile here, um, profile to here. We follow the profile. We see that uh, basically price kind of hit this area. That could have been a retracement. On the way back up, we could have traded it to there and then understand that we need to bail out when it hits this high volume area. It can also be fair value gaps and just other key things like that. Fair value gaps, order blocks, liquidity sweeps like up here. The money maker would be reversing that back down again to the end of this range. So it's just more key levels like liquidity pools, order blocks, um, high volume nodes, even pivot points, which you can see here are accurate as well. These are daily pivot points, and look where price is respecting with these. It's not everyone gets respected, but some of them that have been tested previously and aligned with the volume profile, that works. And finally, management. So trend lines. These are dynamic guardrails that allow you to get in and out objectively. Journaling. TradeZella and other journals exist. Definitely give it a go. If not, journal on TradingView. And then finally, your risk rule. If you do mathematically search a risk of ruin calculators with your win odds and the risk reward ratio, typically you'd be able to work out your risk of ruin, risk of drawdown, etc. And you can go from there. That is 10 minutes, exactly 10 minutes, 3 seconds since it started. That's the entire coaching curriculum of how to trade, looking at your motivation, the mathematic numbers, understanding momentum, bullish, bearish, and sideways, understanding money making levels, key levels of liquidity, and basically targets, stop losses, where things can be placed, and management, how to manage trades. You apply this, you will succeed. That's it in 10 minutes. Bam, bam, bam. Right. Obviously, with my own coaching clients, I go through that in more detail. But overall, hopefully, this helps in more detail. So this is Coach Dan checking out or checking off for the evening. It's great seeing you guys around. Take care. Bye for now.